For more on currencies, we bring in Brian Dolan. He's the chief currency strategist for Gain Capital and is also the author of Currency Trading for Dummies. Brian joins us now from his office in Bedminster, New Jersey. Brian, thanks so much for joining us again. And you heard Lydia's report. She mentioned that Mark Tan of Goldman wrote in his note today he expects the dollar is going to resume its decline because he thinks that tightening policy is a long way off. Is the Fed loath to do anything right now?
Good afternoon, Mark. I certainly agree with him that the Fed tightening is a long way off. I think the market is premature and starting to price that in. The Fed cut to 0.25% in December and said the rates are going to be kept there for quite a while. 6 months is not quite a while. 9 months is not quite a while. A year and a half more so is likely. And I would also agree that the Fed is unlikely to tighten while the unemployment rate is still moving higher. However, I would disagree, though, and I do think, excuse me, that we've seen a pretty significant top in the euro, a bottom for the dollar. And I think a lot of the dollar weakness that we've seen was on excessive fears that about the U.S. ability to fund its deficit, the loss of the U.S. AAA credit rating. These types of things that really undermined and basically propelled the dollar down. I think those issues have been relatively dissipated with words of support coming from China, India, South Korea, and Japan as well.
And did you also mention today, you voiced some concern about the overstretching of the dollar's short positioning. Explain that.
Sure. Dollar shorts and euro longs in particular reached the same levels that were seen about a year ago when the euro was up at 160. And we know what happened from that point. So when positioning does become overstretched, that does increase the likelihood that you've reached a top for the euro, a bottom for the dollar. And certainly in terms of the short-term movements of the dollar, that explains the very rapid rebound in the U.S. dollar just since basically the middle of last week.
How are Treasury yields factoring into this?
They're providing a bit of support for the dollar on the margins. I don't think they're a real driver for the larger dollar. There's too many other themes in play, not the least of which is the global recession and what that does to the U.S. outlook. So in terms of it's providing the dollar against the yen in particular a bit better support, and dollar yen has been one of the leaders in the dollar rebound.
Is relative growth seemingly to be the main factor here driving this?
I think that's going to be the driving theme over the next for the rest of this year. What we're looking at is basically the U.S. Potentially stabilizing, though there's no sign of any recovery yet. And then we think that there's still further room in the downturn in the Eurozone in particular. And we very well might likely see another dip in the UK economy after data there is stabilized. So I think there's going to be a bit of a divergence in the growth outlooks for the various economic regions. But among these, I think some of the more promising ones are the commodity currencies, the Australian dollar and the Canadian dollar.
No, does all of this mean that this weak dollar trend is over?
Yes, I would say so. We are right now. You can look at this two ways. Today's price action could be the extent of the dollar's rebound, and the way we'll be monitoring that will be to see if and when the dollar index can get back up over 81.60, and if the euro dollar falls under about 137.5, that's an indication that the dollar rebound is continuing. Otherwise, at the minimum right now, I look for a little bit of consolidation after the moves that we've had over the last few weeks.
So is the market right now pricing in any future rate hikes, do you think?
Well, they are certainly on the Fed funds futures, but for the dollar, again, I don't think it's driving that much of the dollar's recovery. Again, I think it was the overextension of short dollar positioning and then some better than expected data coming out of the U.S.
What are the best opportunities that you're seeing right now?
I think some of the best opportunities, again, are in the commodity complex. That's one of the things that we haven't seen pull back that significantly, which would normally happen when the dollar does rebound. So that suggests to me that there's still some value to be had in the Australian dollar and the New Zealand and Canadian dollars as a result of the current pullback.
We should note that in currencies tracked by Bloomberg, the dollar fell in the past 3 months against all of the 16 most traded currencies. Does that give you pause?
It does certainly, but it's not really surprising when you look at the borrowing requirements that the U.S. is facing, as well as basically the speculative nature of much of the currency market. So in terms of picking on the most vulnerable currency, the dollar certainly stood out over those last few months. But again, looking ahead, I think a lot of the fears of the ability to fund the U.S. debt have been overblown, and then as the U.S. The stimulus has not even really kicked in yet, so I'd expect to see a more rapid pace of recovery coming out of the U.S., and that also is going to help support the dollar for the rest of this year.
Brian Dolan, the chief currency strategist at Gain Capital Group, joining us this afternoon. Brian, thanks.